back down. Let's put zeros across the board for the rest of it. Nothing's happening here. Nothing's happening to the income statement, even though we got cash, because we already recorded the revenue when we did the work. What about the subledger? The subledger needs to go back down because they have now paid us. So I'm going to say this is going to be negative of the 1,600. And so now our total in the subledger is going to be equal to the prior balance plus the current activity, sum of these two items, and close that up, and boom, it's back down to zero. So now our subledger is reflected that this A has now paid us. We billed and now it's been paid. So the subledger now matches what should be on our ledger. Let's then put the balance here. So the balance is going to be the sum of these two. Checking account goes up. So now we finally got the money. That's good. Accounts receivable goes down. No impact on total assets, but we got like a better asset, right? Let's get rid of the underlines. So we lost the receivable, but now we have a better asset. We have cash. Let's put a format paint here and put the underline, and then I'm going to format paint here and get rid of the underline. Not put the underline, get rid of the underline because it shouldn't be there. All right, so there we have it. And so now if I copy this down, copy these down to there, copy this down to there, copy this down to here. We put an underline here, home tab, font group, underline. Notice zeros across the board because both the transactions, both of the accounts impacted were in the assets, but we received kind of like a better asset. We got the cash, which we would rather have than an IOU for someone that owes us the money. All right, let's do another one. Let's say on, let's make this one on 410. Now on this one, I'm going to add the added complexity of this undeposited funds, which is often in the works when you have to deal with the real world, because you have to be able to reconcile the bank accounts, which also takes into consideration bank feeds. If you're dealing with that in an accounting scenario situation, bank feeds are useful, great, can simplify the process, but also they don't make everything seamless. You have to figure out how it's going to work. So let's say now we invoice for service, invoice B. Let's say we're going to invoice B client for service done. So we're sending out another invoice. We did services, we did our bookkeeping, our law firm services, or whatever it is. We enter the invoice to bill the client. So is cash affected? No. Instead, accounts receivable is going up. What's the other side? It's going to be revenue because we did the work and we earned it. Therefore, income is going to be the other side. On the equity side of things, on the income statement, sales or revenue. Let's put some zeros across the board. So 0, 0, tab, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0. Subledger is going up. Now we're going to say tracking B customer owes us money. So I'm going to track this in the subledger for B, 1,400. Therefore, our total in the subledger should match